All right, so what is good, everyone? It's Fear.ing. It's currently August 18th, 2025. I'm here to finally get the lesson, which is also going to be a in-depth trade breakdown on how we can confirm market maker models with utilizing quarterly theory. Now, like I said, this will be a in-depth trade breakdown on the trade I taken last week on Tuesday, August 12th. Doing this a week later, as I literally have had no time to record this video since then. So when it comes to understanding this concept, this overall trade breakdown, the concepts you have to understand is the time frame alignment video, validating a 15-second time frame video, both of which can be found in the WAP. You should understand the foundations of Power 3 market maker models, the day QT YouTube video, which is public, as well as his interview if you're in the server, which you should be if you're watching this. Go to the private chat, go to pinned messages, and you'll find that link. And of course, if you're watching this video, you should have watched all the WAP videos prior to properly understand this video. So when it comes to understanding the interlinking Power 3 with market maker models, because again, this is how we understand market maker models with utilizing time. Power 3 represents time and a bit of price, and market maker models itself represents price. So Power 3s, this is overall the framework of the trade I taken. And for reference, I'll quickly show that trade I was taking. But before then, this is the overall framework where we have 3 different Power 3s representing a market maker model. Specifically, the sell side of the curve here representing the 9 a.m. candle, which was this down close candle right here, representing the sell side of the curve, while we had the 10 a.m. candle open, soup the 9 a.m. low, which also had formed a 1 hour swing divergence, which we'll recap in a second, following the 11 a.m. candle opening, which simply displayed continuation. This is the overall framework of how market maker models operate by utilizing Power 3 to represent time. Now, specifically, how we confirm the smart money reversal is going to be utilized with quarterly theory. Now, when it comes to the trade itself that I taken 2 trades on this day. First of which I pre-fired longs, simply was thinking I was playing the smart money reversal, and well, of course, I was wrong. Or I guess, my bad, the first stage redistribution. That's what I thought I was trading. So initially my mindset was, okay, original consolidation, first stage reaccumulation, smart money reversal, as we had microcycle found at EQ of this range, followed by displacement higher, first stage redistribution, and then I thought I was trading that. It was a very low risk to reward trade, and overall was not the most high probability setup, but I didn't want to miss the move as I was very, very confident in the drawn liquidity. But the biggest issue with the trade in itself was the fact that I did not incorporate time. So when it comes to the right here, the Power 3s that represent time, 9 a.m., 10 a.m., and 11 a.m. When we look at the first, false market maker model, I was wrong here. There was no reference to time. So due to that, we really cannot classify that as a market maker model, as we really don't reference time. Now, the second trade was here. Now, I'm just going to show you guys the market maker model chart up here. So fast forward a little bit. This is overall the framework of that trade. We had our original consolidation starting at 9 a.m. all the way down here, starting at 9 a.m. Go up here, original consolidation, which I just classify as this entire range building up here. From there, displace lower, first stage reaccumulation, second stage smart money reversal. From there, we displace higher, first stage redistribution, second stage, and then the original consolidation. So this is the overall framework in which price had operated in. And of course, that is in reference to the 1 hour Power 3s, 9 a.m., 10 a.m., and 11 a.m. So now when we have overall, we have the first breakdown, what ultimately led us to that trade. Why were we bullish biased? Why were we so convicted in seeing higher prices? Well, that's where we get here. The first step we do going into any given day is first overall understand where price is relative to our higher time frame. Within our higher time frame, we study the yearly Power 3. Within our yearly Power 3, what do? And actually, before I get ahead of myself, we break this down into steps. If we understand of what stage of Power 3 that we're in within our yearly Power 3, then we can go from there and have a bias for our quarterly and monthly Power 3. So within our yearly Power 3, so for reference, the trade I taken was on the 12th, all the way up here, this distribution candle right here. Where were we in reference to that? Well, where we were is in the distribution stage of our yearly Power 3. And from there, That means that going into every single month, every single quarter, we overall want to see classic open, low, high, close development. So as we can see, this was Tuesday. This was the start of the week. So what do we see at the start of our monthly power 3? Now, let me quickly add annotations to this. Well, within a monthly power 3, what do we see? Well, what we see is actually what I'm going to reference on this chart, but we can see our monthly open right here, August 1st. And what we immediately do is manipulate down, specifically manipulating down into this monthly SMTF. As we can see, YM trades into this monthly SMTF while souping this monthly PRC, forming SMT, the previous month low, which I classify as quarterly cycle sequential SMT. So immediately there, that can confirm higher prices. And when we study the overall development of the previous week, we had confirmed that the previous week had then caused the small reversal within our monthly power 3. So that means if we know that price is within the distribution stage of our monthly power 3, that means going into every single week, we want to see classic open, low, high, close development. So again, this is a fractal concept that applies to all power 3s. We just start with the highest time frame: yearly, quarterly, monthly, weekly, daily, and then the lower time frame ones, of course. And so we want to see classic open, low, high, close development. And this is what we see for this week. Now, it's a little bit cropped out on this chart, so we'll go back here and reference the triad once more. So go back here to where I taken that trade, and this is what we were presented with. All right, there we go. So within our weekly power 3, what do we see? Well, let's quickly mark out our weekly open so we can have a reference. Weekly open, what do we see? Accumulation, manipulation down, and what do we see at the end of the manipulation? Well, let's look at the previous day. NQ's previous day is right here. ES's previous day is right here. Previous day is low. And then YM's is right here. YM runs it out. NQ, ES both fail to do so, giving us a weekly cycle sequential SMT. So, great. Now within our weekly power 3, we have a higher time frame sequential SMT. What would then confirm that? A lower time frame sequential SMT. Now we actually had quite a few different things lining up here. So bear with me, be ready to take notes. I'm gonna quickly go through these, take notes, go look for yourself after if I go a little too fast, but here it is. So first thing is weekly cycle sequential SMT. What do we see at our new daily open? Going into the day that I had taken this trade, which was Tuesday here. What do we see? Tuesday opens. We'll quickly mark out this. Tuesday opens right here, 6 p.m. on August 11th, right here. That's the previous day's body low. What do we see YM do? We close below. What do we see NQ and ES both fail to do so? Both of them do not close below, giving us new weekly cycle hidden sequential SMT. Now on top of this, we can even go down to a lower time frame, and why I'm referencing this when we already had a normal weekly cycle, you'll figure that out in just a moment. But on top of the hidden weekly cycle sequential SMT, we also had hidden daily cycle sequential SMT, as we can see right here and here. ES and NQ both close below the previous cycle's 15-minute body low, while YM fails to do so. So now the previous day's low is now protected because we now have formed hidden two different stages of hidden sequential SMT right there. So what did I say this is going to play reference later? Well, this is why CPI had expanded higher without manipulating down and running out the previous day low, because we had hidden daily cycle and weekly cycle attached to that. So now leading up to 8:30 opening, which was CPI, I believe, I'm pretty confident in that. It was CPI at 8:30. What had ultimately led us to that expansion high? Well, we had Q2 low, daily cycle Q2 low on ES. Look over here on YM, or on NQ, and we'll look over here on ES, or on YM. So ES and YM both run it out, and Q fails to do so. So now leading up to CPI news released, we now have daily cycle sequential SMT. Now on a even lower time frame, we can see that we have 90-minute sequential SMT as well. As we can see, and YM during Q2 runs out the Q1 low. Same thing on ES down here, and on NQ we failed to do so. So now we have regular weekly cycle sequential SMT between Friday and Monday. Monday, Tuesday has hidden daily cycle and hidden weekly cycle. And now leading up to New York Open, leading up to 8:30 news, we now have daily cycle, 90-minute sequential SMT all at the lows. And this is within the distribution of our yearly power 3, quarterly power 3, and monthly power 3. Now we are getting ready to trade the distribution of our weekly power 3. Of course, we don't trade prior to New York Open, so now we have to see what pre 9:30 had ended up doing. So pre 9:30, we were presented with this. Now, 8:30 expands higher. Initially, my thoughts for this day was that this was just simply an expansion candle, simply because we had so much bullish sequential SMT attached to that, and there was no significant wick. So when it comes to data highs and lows in general, we usually want to see a rather significant wick if we're going to anticipate it to be returned to. If we have a significant wick at the lows, at the highs, then it's like, okay, that's pretty obviously going to be a data high or data low soup, and then we go to the other data low or data high. However, since we pretty much had no wick whatsoever, I was thinking that this was simply just going to be a expansion candle, and we're going to play continuation off of that going into New York Open. I've been a part of many times. I've missed out on many trades simply because of this, because we have expanded off EQ of whatever given range we're trading within, simply because I was thinking we're going to return to the data low, even though we didn't need to. Now, obviously, we ended up doing so within this day, but nonetheless, I gave a long an attempt. So that's where my initial long off market open had taken place. Back here, this long right here. So this is ultimately the confluences behind that first trade. So 9:30 opened up, and what do we see? Manipulation down, we mitigate EQ that range. And while doing so, we also formed weekly cycle sequential SMT between Q1 and Q2. As you can see right here and right here. So we immediately had microcycle sequential SMT, EQ the range, and most importantly, which I forgot to clarify, was a clear jump on liquidity higher, which was the previous month high. As at this point in time, all three indices had yet to run it out. And we already talked about the narrative because we're in the distribution stage over yearly, quarterly, monthly, power 3. And now within our weekly power 3, all of that sequential SMT was confirmed by seeing that strong displacement higher. So now what we're doing is looking to play continuation off of that. So below our weekly open, 15-minute BISI, which doesn't really play any significance. What is the main aspect we want to cover is the fact at EQ of the daily range, microcycle sequential SMT, and from there I was looking for an entry. Initially, I would have entered off the next 1 minute CISD. However, the thing is that we had displaced aggressively, and I was not comfortable with a 50-point stop loss, as my TP was only 84 points away, which is a significant amount, but the issue is the risk reward. I was looking at barely a 1 to 6.6 risk reward, or 6 to 6 risk reward, and that's not good at all, especially for my model. My model usually at a bare minimum is a 1 to 3. I'm open to taking 1 to 2s. Very rarely does it end up happening if I'm properly trading the distribution, but if the drawn liquidity is clear, then I'm fine taking 1 to 2s. So I was not comfortable with this, and from there I had simply just played continuation. My continuation was this. We had a 1 minute BISI right here and here, and as we can see over here on YM right here. So we can see that NQ trades into it. ES and YM both failed to do so, giving us a 1 minute SMTF. And from there, while trading into that 1 minute SMTF, we also have a 1 minute swing divergence, as YM fills around the previous 1 minute low while NQ and ES do, and specifically while tapping into this 1 minute SMTF. And from there, all I did was enter off the next 15-second CISD, which my entry was roughly right there. And that was the first trade I'd taken for the day. TP at the high, and the reason I was fine taking this is simply because my risk reward, and I got filled a few points lower. My risk reward here was pretty much perfectly a 1 to 2 risk reward, so I was fine taking that. Still was not normally what I have presented to me, but I was fine taking it just as I was pretty convicted with the drawn liquidity. Now what we ended up doing from that point is obviously stop me out, but for reference, what ended up happening was Trump started talking. Now I showed that in the YouTube video for this lesson, which I just covered the basics of Power 3 market maker models and talked about anything QT related, but I showed that screenshot of Trump speaking during then. Now, the thing is though, would I have been stopped out regardless of Trump speaking? I don't know. And due to me not knowing that, all I can just say is, okay, that's a normal loss. It happens. It was already a low risk reward. It was not a normal trade I normally take. So, it's a trade I normally take, but the risk reward is super, super poor. I was entering within premium of every single range we're trading within. It overall was high risk going into it. So all I did at that point was just simply wait for price to, well, develop more structure. Now, I posted in my intraday for this day. I'm gonna have to go back a little bit because again, I'm recording this pretty much a week after. So within my intraday, going into the trade right here, yeah, so Trump speaking, talking about I'm considering allowing a major lawsuit against Powell. Trump speaking all there. From there, I said everything really checked out for the first trade. It was unfortunate. However, I said we were right next to the data low, so I'll be watching for that to be rated. And from there, I was looking for a long position. So data low gets rated. Again, we still have every single confluence checked off from the low of the week. We have weekly cycle hidden, daily cycle hidden, regular daily cycle, regular 90-minute. Although still at the low of the day, low of the week, I was still convicted with longs. All we had to do now was raid the data low, and we ended up doing that. And this is where my trade had taken place. So quickly turn on a few different indicators that I utilize, and I'll give some context into why specifically I was able to catch low of the day. So many, many different things had lined up here. I'll quickly remove these annotations so we don't get crowded here. So NQ runs below data low. From there, we can see that YM does not, ES does not. On top of that, while NQ does, specifically running down into our 2 week open and a new dog in discount on the range. So below our 2 month open, below our 2 day open, below our 2 week open. While doing so, we can also see, well, let's look at the time. What just opened? 10 a.m. 10 a.m. opens. What do? Immediately manipulate lower. Now this is where we were able to validate my entry. My entry was based off of all this lined up together. 10 a.m. opens, 1 hour chart. What do we see? Well, 1 hour time frame. The very first time frame we were even studying, as we had weekly cycles going show some T, 8:30 news. This places price higher. What do you see? 1 hour CISD. And let me just, how do I remove executions? We'll go back to that. All right, so going back to that trade, right here. So 1 minute CISD turns into discount of the daily range. While being within discount of the daily range, we test that new dog, 2 week open, we're below a 2 day open, 2 month open, all that. What we can see specifically here is that we also have a 1 hour BISI at 8 a.m. NQ trades into there, ES trades into there, YN does not. So boom, 1 hour SMTF. While trading into that SMTF, we can also see that YM does not run out the previous 1 hour low, because that is where the SMTF was. So now we have a 1 hour SMTF, 1 hour swing divergence, and in the 50-minute time frame, what else do we see? 50-minute time frame, well, we didn't just have a 1 hour swing divergence, we also had a 50-minute. ES and Q both run out the previous 50-minute low, and Q, or while YM does not. And that is specifically a 50-minute PSP swing divergence. As you can see, this 945 candle is a down close on NQ, down close on ES, up close on YM. Following candle swoops out at 10 a.m., failing to do so on YM. Boom, 1 hour swing divergence, 50-minute PSP swing divergence, and same exact thing on the 5-minute time frame. As we can see right here, 10 a.m. swoops to previous 5-minute low, while YM does not. And this is all while, simultaneously, while tapping into that new dog, 2 week open, 15-minute, 5-minute, and 1-hour swing divergence. And why are we looking at all those time frames in the first place? Because we have weekly cycle, daily cycle, and 90-minute. We have 3-stage sequential at the lows. Now we have all the proper time frame alignment swing divergences found at the low of the day. Not the low of the day, but right underneath our data low, while having a crack correlation with the data low. So with having all these swing divergences stacked together, trading into this new dog, new true week open, below true day open, 2-month open, all these stacked up together, I was able to see this. So on top of all those 5-minute, 15-minute, 1-hour swing divergences, we also had this on the 1-minute time frame. As you can see, at 10:01, we soup the 10 a.m. candle on NQ. We failed to do so on ES. Same thing on YM, we failed to do so. What does this allow us to do? Well, normally we like to just take trades off the 1-minute time frame, but what does the 1-minute time frame actually give us here? Nothing really. Obviously, we can look to enter off the next 1-minute CISD. The thing is though, that's all the way up here. If we were to enter there, we would perfectly have a CISD right here. Our stop loss is 95 points. Our TP is only 126 points. Not barely even looking at a 1-to-1. That's not good at whatsoever. But because we have all these swing divergences stacked together, specifically this 1-minute swing divergence, below the true week open, below the true day open, 2-month open, new dog, all that stacked up together inside of 1-hour SMTF, like there's literally so much here, we can validate dropping down to a 15-second time frame. And that is exactly what I did. 1-minute swing divergence, 15-second CISD. Enter there, stop loss at the swing low, and TP at the previous month high. And that was it. That was all there was to it. And looking at just over a 1 to 10 reward. In fact, I got an even better fill. I got filled a few points lower, and my trade was a 1 to 12. And that was it. That was everything that lined up for this trade. Again, here's the little time frame alignment. So, ultimate discount of the range, 1-hour SMTF, 1-hour PSP test, and I didn't reference this, but also mitigated the consequent encroachment of this 1-hour rejection block. From there, on the right here, on the 50-minute time frame, same exact thing. 50 or not, almost the same exact thing. 50-minute PSP swing divergence. We had continuation on the 50-minute, but specifically where I'd enter my trade, 50-minute PSP swing divergence, 5-minute time frame, 5-minute PSP swing divergence, testing a discounted 5-minute order block, and then the execution on the 1-minute chart. Now my execution specifically was a 15-second CISD, but this is everything that had been stacked up together. So please, please, please just let me know if there's any questions, but this is the overall breakdown of the trade I've taken. Again, this is the overall framework of the trade, specifically catching the smart money reversal. Now again, the biggest takeaway you can take away from this video itself is to stop fading the distribution. This trade, we were within the distribution of the yearly power 3, the quarterly power 3, the monthly power 3, the weekly power 3, and even the daily power 3. So at all, if you're looking for shorts at that moment with a clear external drawn liquidity higher, you're not going to make it in trading if you continue to do that. Please learn from this video to stop fading the distribution. We're distributing within every single possible power 3 that we're trading within. Yearly, quarterly, monthly, weekly, daily distribution, every single one. Every single one, and we perfectly caught the smart money reversal. So again, if there's any questions regarding anything, please just reach out and let me know. Otherwise, that is a general breakdown of the trade we had taken on Tuesday, August 12th, 2025. See you guys all in the next video.